That is true. No, I mean, it's just that. Well, real estate companies have been grabbing headlines with a stunning show. Just an hour back, DLF announced it has sold all the 1,100 units of luxury apartment that its Arbour 2 project in South Delhi in 72 hours. Last week, Latha Developers announced that in their 9 months of FY24, they have surpassed their business development target for the full year. Indeed, luxury housing has done fabulously well in the last 9 months with 150 figures for the first 3 quarters of the current year. So how will 2024, calendar 24 pan out, and what's the ask from the budget? I have with me Abhishek, thank you very much for joining in and dropping into our studio.
My pleasure, Latha.
Okay. Well, that really is the first question. You know, it looks like luxury has done very well. How did premium do in 2023? What's your overall takeaway from 2023?
Latha, generally 2023 has been a good, strong year for the housing market. Obviously, the luxury market, because of the bigger numbers involved, makes more headlines. But the reality is that the entire pyramid is operating, and it's fundamentally driven by the fact that there is job confidence in the country and there is income growth happening, and consequently people want to lead a better quality of life. You know, at some figures, our estimate says that there is a need for 100 million homes in India over a decade, and the maximum supply that we can do, even if all developers put their maximum effort together, is less than 10 million units. So it's a huge supply-demand gap, and therefore I think we are, a long way to go.
No, that is the overall picture. But in 23 itself, what we got from the Anarocks and the Knight Franks and the JLLs is that mid and premium have done well, but not affordable. Can you tell us a little more about mid? I mean, in the, say, sub 3 crore category, our sales, I don't know how you define mid, right, but luxury quite clearly has done very well.
Yeah.
What about the mid?
Yeah, so I think Anarock is right in saying that the affordable entry segment, which are homes between, let's say, 30 lakhs to 75 lakhs, are the ones which have performed the least well. They're still grown, but the least amount of growth. And that's really driven by the fact that for no fault of theirs, interest rates suddenly spiked by, 200, 300 basis points. That clearly puts a load on the entry home buyer because they are very, very constrained. And it also reduces their loan eligibility. So, as interest rates have now started flattening and hopefully will come down over the next 12 to 18 months, we will start that segment because there's a lot of pent-up demand there. It just is that there,
You will start even in the under 1 crore?
Yes.
In Bombay itself?
I think across the country, that is a segment where you have the maximum amount of increase in demand. Okay. It's just that, people are waiting for the interest rates to get a little bit better in that sub 1 crore segment so that their loan eligibility increases, because the amount of loan they can get is a function of their salary, which is doing well, but also the interest rate. So the interest rate has to moderate a little bit before they can get the loan amount that they need for the home that they dream of.
8-9% for a home loan is what we have lived with for the last 3 decades. It was only in that, COVID period that we got used to this sudden 6.5-7%. So I guess getting back to that will look very, very tough. But versus mid versus luxury, how is the split happening?
As I mentioned, luxury grabs the headlines,
okay.
But the fact is that the demand across the board is quite strong. I think, different people will have different figures, but the fact is that the industry across different price points is growing quite well.
Okay. Now, let me come to the numbers that you announced to the exchange itself. There has been a quarter-on-quarter decline in bookings and collections. Is there something we should worry about?
I don't think we look at our business on a quarter-on-quarter basis. There is a fair amount of seasonality in the real estate business. For example, this quarter, Shraddh, which is an inauspicious period, is particularly for certain communities, moved in the first half of October. Typically, it comes in the end of September. Okay, now, you can't even, therefore, you can't compare either quarter-on-quarter or year-on-year. But having said that, I think, we look and guide our investors on a full-year basis. Okay. On a full-year basis, we had guided to 20% growth, and we feel pretty good about delivering on that 20% growth.
Well, among the bigger real estate, Soba managed to show an increase quarter-on-quarter, despite Shraddh. Now, what about the, you said that your business development is over 20,000 crores in 9 months itself. versus an expectation guidance of 17,000 crore. What exactly do you mean by that business development? And therefore, will you also upgrade your, pre-sales guidance?
So, Latha, business development means that the projects that we've added, what is the estimated sales that will come from the projects that we've acquired in this time period? We've guided for a full year number of about 17,000 crores. We've done about 20,000 crores already in the first 9 months of the year. This operates typically with a 12-month lag because by the time you acquire land and take it to market, it's a 9 to 12-month cycle. So, yes, definitely it helps, sort of provide more visibility for the coming
year.
Yeah.
Okay. And so now that you've already done 20,000 crore versus a full year target of 17, what may be the full year for the current year itself?
I think, Latha, we generally sort of, want to make sure that we deliver on our guidance or slightly exceed it. On this one parameter KPI, we've done it. We're not changing any guidance. But I think what it's telling us is that in spite of the fact that the housing market has been performing well, land supply is available for top developers where the partner who's selling the land or is doing a joint development on the land feels that they will be well treated in the process. So what I think we can understand from this is that there is plenty of land available for sustaining the growth of the sector in the years to come.
So your pre-sales guidance of 14,500 crore also you will, overachieve?
I think, Latha, like I said, our goal always is to deliver on guidance or to do slightly better than that. And I think that's where we look headed to for the full year.
Okay. What's the sense you're getting about margins? Have building materials become expensive or land become expensive, or will you be able to actually improve on margins?
So that at an overall basis this year, we will see a slight uptick in margin on a like-to-like basis. You may know that on an owned land, you make higher margin because you make a higher investment. The ROE is lower, and that's the other way around when you do joint development. So generally, I think there has been price growth of 6 to 8%. We like that level of price growth because it is good for the existing buyers, but it is below wage growth and therefore improves affordability. At that level of 6 to 8% price growth, you also get margin expansion because total cost growth tends to be around 4 to 5%.
Okay, so short point, your margins can improve, you're saying?
Yes.
Okay. How are prices, proceeding? How much could you raise prices in the quarter gone by? And what does it look like in the current quarter, the pace of home price growth?
On an annualized basis, Latha, we had guided at the start of the year to price growth of between 6 to 8%. We like price growth to be a little south of wage growth because India's story is a volume story. There is a lot of growth in housing volume that can happen and should happen as India moves from a low-income country to a mid-income country. Now, the way that happens is if affordability keeps getting better, and affordability is a function of salaries versus price growth, and of course of interest rates. I think interest rates are going to perform and help affordability over the next 2 years because they are, I think, peaked. If price growth remains south of wage growth, you're going to also help that factor improve affordability, and consequently you can continue to see volume growth.
There is enough confidence that interest rates have peaked, but whether they will fall is still a matter of doubt. So much will depend on the world as well. You have your facility management business, which gives you an annuity income. Can you give us some idea what's the current size? Are you looking at that to be scaled up? If yes, how much?
Yeah. So, Latha, as a company, what we are hoping to do by fiscal 26 is that whatever limited debt, because our debt has come down quite a lot and will continue to come down, but whatever limited debt we have, the servicing of that can be covered by our annuity income stream, so that effectively our development business has no debt at all. And that is a very, very de-risked, low-risk way of operating in our view. So our facilities management business, the rental income we have from certain offices and retail developments, and our share of income from our joint venture that we have for doing warehousing, all three combined together should be providing about 500 crores of net income by fiscal 26. And that will cover all our interest expense in that year. And that, I think, makes our business a lot more resilient. Because while we have a confidence, this is a 15-year cycle, we are only now in 2024 in year 4, there will be, some black swan event, there will be something which will go wrong. And the lower the risk on the balance sheet, the more stronger the likelihood of outperforming.
You took away my next question, which was, where are we in the real estate cycle? Okay, we are in the 4th year of what you see as a 15-year cycle. Is that right?
That's correct.
Okay. Now, if that is the case, can you give us a more near-term, since you took away my longer-term question, near-term, how does this look? Like in 2024, what would be the big numbers for the industry? Will it still be luxury and then mid and then affordable? Any numbers at all that you all are looking at as an industry?
I think at an overall aggregate level, we expect that the industry will grow at about 20-ish%, which is a lot of growth for an industry which is fairly large. 15% volume, 6, 7, 8% price, that kind of mix. The top companies will do as well or better than that. But I think what we don't understand fully is the second order effects of housing, because so much employment gets created directly on the construction field, and then the entire supply chain, 400 plus industries depend on housing. So when you saw the GDP numbers come out a few days ago, you saw that construction was the biggest driver
10.7%
of why our GDP is doing as well as this has. And this has been historically the case. Whenever a country moves from low income to mid income, housing drives that growth and housing benefits from that growth. It happened in the US after the Second World War, 20 continuous years of housing growth from 45 to 65. It happened in China from the mid-90s to the middle of the last decade. And the next 2 decades, I think, this decade and the next one, housing is going to drive the economy and is going to benefit from the growth of the economy.
Okay. In that case, you will have something to ask of the finance minister. Well, just to tell our viewers, we have already given Abhishek a bunch of cards to write his budget wish. As you can see, there is the budget ballot box sitting next to him. So, well, before you cast your vote or cast your budget wish, what is it that you want by way of policy from the budget or even otherwise?
Latha, I think, as I said, housing has such a huge multiplier effect on the economy. So to sustain our growth, it's very important that the volume of housing keeps increasing and growing. And therefore, today, when the affordable segment, as we discussed, is today gotten hit by interest rate increases, which they had nothing to contribute to, we need to support them in getting onto the housing ladder as soon as possible.
Yes.
So whatever the government can do to put more money in the hands of the entry-level buyers, those who make between 5 to 15 lakhs a year and are the entry-level buyers, would really have a cascading multiplier effect on the economy. And I hope that the Honorable Prime Minister and the Honorable Finance Minister can think about this and support the home buyer getting on the housing ladder as early as practical.
So more income and less taxes for that.
Whatever gives them more net income.
Okay. Well, that's a great one. Just a final question on your own big headlines for the current year. I mean, will it be Palava? Will it be Thane itself? Or will it be more of South Mumbai or outside Mumbai? What are the big headlines we can expect from you?
Latha, we like our business to be very diversified and not focused on any one segment, which is we play across all segments of the housing ladder and not focused on any one project. From Malabar Hill to Palava and now outside Mumbai in Pune and Bangalore, we like diversification. So, what you can expect from us is, a business which is very granular, diversified, and therefore can deal with any ups and downs in different segments reasonably well.
Okay, all right. Now, I think we'll have to wait for your individual press releases for your big projects. But I invite you to please cast your vote, your budget wish list for the finance minister, and we'll assure you that we will reach it to her.
Thank you so much.
Well, as you can see, a big 20% plus growth expected for the real estate space itself for the current year, 2024, and a 15-year cycle in which we are only in the 4th year. So expect the cycle to continue. That's the word coming in from Macrotech Developers. Abhishek Lodha, thank you very much for watching this edition of Bazaar, and it's the Economy Chartbusters after a break.